What is the range you anticipate for oil for the rest, let's say, of 2020, and where would you start to be worried that it might start a slip sliding away?
I mean, we think WTI is going to average between 37 and 42 in this $5 range for the remainder of the year. We get more optimistic about oil as we go into next year, particularly the fourth quarter, when we think that oil could basically trend in the low 50s. But things that we're watching for really are the demand story. If we get a vaccine or not could be very impactful for the shape of oil demand recovery. We're also watching, as you mentioned, the rising COVID-19 case count and the questions about whether it leads to a return to shelter-in-place policies. U.S. gasoline demand is so important to the oil market. It's 10% of total demand. So if we start to see U.S. drivers keeping their cars in the garage, that would be something that we'd be very worried about in terms of oil prices.
Yeah, and obviously there's a rise in Europe. I would imagine that you might be ultimately concerned, perhaps even most, about a rise in COVID cases in China, and if that causes that economy to slow markedly, because China is a big demand participant.
I mean, you nailed it, Tyler. I mean, our biggest concern would obviously be anything that happens in China. I mean, China has really suppressed the virus. It has been the recovery of the Chinese economy that has driven the recovery in the oil markets. So if we were to get anything in terms of a revival of cases in China and a potential slowing of economic growth there and mandatory shelter-in-place policies in China again, that would be almost a worst-case outcome for the oil market. So we'll be watching it very closely.
On the supply side, you have pointed to the return of some Libyan barrels to the market. Talk us through that.
No, I mean, Libyan production has come back faster than anticipated. We've had some breakthroughs in the security front, more of a sort of off-ramp in terms of a diplomatic outcome to the fighting that had been going on there for years. And we've started to see Libyan production come back rapidly. And we're now looking at a situation where Libya could be breaching that 1 million barrel per day mark. That is putting a lot of pressure potentially on OPEC, which would have to accommodate these barrels to keep the market balanced. And while Saudi Arabia could sit down more barrels, other countries like Iraq simply are struggling with the current cuts. I mean, they have not been able to pay civil servants since September. They almost need every last barrel. So Libya is weighing on the market. And as we think out to 2021 and where the election becomes impactful, if you were to get a Biden victory, we are potentially looking at the return of Iranian barrels as well if we get back into the Iranian nuclear deal. So that's another potential headache for OPEC in 2021 on the supply side.
You raised Joe Biden there, and I wonder whether what he said last week in the debate about big oil companies and drifting away from fossil or carbon-based fuels, does that move the needle at all in the oil market? Did it?
Well, I think certainly, there has been some ambiguity about the Biden energy policies. I mean, he's been very clear when he's been campaigning in swing states like Pennsylvania that he is not looking to ban fracking. He's talked about investing in renewables, but the question was sort of, what is his general stance towards the U.S. fossil fuel industry? They were quick, though. The campaign was quick to come out after the debate and say, again, he's not talking about banning fracking. What he's talking about is phasing out subsidies for fossil fuel producers in the United States. I would say, though, one thing to bear in mind is any changes to the tax code would likely require congressional approval. And so that's where the makeup of Congress will be very important to see whether those policies are enacted.
Shepard Smith here. Thanks for watching CNBC on YouTube.